Welcome to FIRE's educational video series. In this video, we will speak about some valuable guidelines and suggestions relating to drawing and using trend lines. Without any further ado, let us get started right away. The greater the number of times a trend line has been touched without being significantly penetrated, the greater is the significance of that trend line when it is eventually broken. What this essentially means is a trend line that is touched 5 or 6 times is more important than a trend line that is touched just 3 or 4 times. Look at this chart here. Observe that the trend line was touched 5 times. Eventually, see that once it broke on the 6th test, the price advanced sharply. In short, the greater the number of times a trend line has been touched, the greater is its significance. The angle of the trend line is important. Preferably, an ideal trend line is the one that is neither too shallow nor too steep. If a trend line is too shallow, its validity, when broken, is questionable. On the other hand, if a trend line is too steep, it will break sooner or later. Also, when a steep trend line is broken, it usually indicates at a consolidation than a reversal. In this chart, notice this trend line. See that the angle of this trend line is quite shallow. As a result, once the trend line was broken, it was followed by a lot of choppy price action before heading lower. Meanwhile, towards the fag end of this chart, a trend line has been drawn to account for the price rise. However, see that the angle of this trend line was way too steep. Such trend lines are soon broken because it is difficult for the price to maintain such an angle of ascent or descent. Once broken, such steep trend line breaks are usually accompanied by consolidation before deciding the future trajectory. Lastly, now look at this trend line. See that this trend line is neither too shallow nor too steep. Once it broke, notice that there was a sharp reversal in trend from down to up. When a trend line is broken, it does not necessarily signal at a reversal in trend. In fact, when a trend line is broken, one of 3 things could happen. Number 1, there could indeed be a reversal in trend. Number 2, there could be a consolidation followed by a reversal in trend that prevailed before entering the consolidation. Or number 3, there could be a consolidation followed by a continuation of the trend that prevailed before entering the consolidation. In this chart, notice that the price was trading above the uptrend line for some time. Once this uptrend line eventually broke, see that the price entered a prolonged period of consolidation. Eventually, see that the price broke out of this consolidation and resumed the prior uptrend. In this case, once the trend line broke, what followed was a consolidation and then continuation of the prior uptrend. When drawing a trend line, don't just draw one which ends when you release your mouse button. Instead, get into the habit of drawing a trend line that extends infinitely to the right. Why do I suggest this? Because once a trend line is broken, it tends to switch its role. In other words, once an uptrend line is broken, that uptrend line could act as a future area of resistance to price. Similarly, once a downtrend line is broken, that downtrend line could act as a future area of support to price. Notice this chart here. See that this uptrend line was broken with a notable gap down. Following this trend line break, see that the price started gradually recovering. However, also observe that this recovery ended right after touching the uptrend line. In other words, notice that before the break, the uptrend line acted as a support to price. However, following the break, the uptrend line acted as a resistance to price. When a trend line is broken, one needs to validate whether that break is genuine or false. To do so, several parameters could be used. For instance, one could use any one or a combination of percent filter, closing price filter, volatility filter, volume filter, etc. One could also confirm the validity of a trendline break by using price tools, classical price patterns, Japanese candlestick patterns, etc. While doing so does not guarantee that the break will be successful, it however enhances the probability of a successful break. Remember, technical analysis is all about probabilities and not certainties. Notice this chart here. See that the price broke the uptrend line following a decent rally. Closely observe that this trendline breakdown was simultaneously accompanied by a classical price pattern breakdown. When one signal is confirmed by another, it enhances the validity of the break, which is what happened over here. By the way, what is this classical price pattern? Well, forget it for now. We will talk much more about classical price patterns, Japanese candlestick patterns, etc. in later videos. This is in continuation to the prior two guidelines. Once a trend line is tested or broken, don't blindly and immediately trade on that test or break. Instead, wait for confirmation of that test or break from the price itself before deciding to act. In this chart, notice that the price was trading above an uptrend line. See that when this uptrend line was tested on the third occasion, there were minor breaks for 3 to 4 bars. However, notice that the price never really managed to sustain below this trend line. If you look to the left of the trend line break, you will notice that the region where the price broke the trend line was a former resistance that later acted as a support. This region again acted as a support when the trend line broke briefly. Eventually, the price rose above the trend line and resumed its prior up move. In this case, see that the trendline break turned out to be false. Blindly and immediately selling on the trendline break would have resulted in a loss as the price never really went lower. However, by being aware that there is an underlying support a few ticks below the trend line would have alerted the chartist not to sell immediately once the trend line broke, but to wait patiently for the support below the trend line to break before deciding to act. These are the key guidelines and suggestions that we wanted to talk about in this video relating to trend lines. In the next video, we shall talk about the remaining suggestions and guidelines on trend lines. Well, that was all that we wanted to talk about in this video. If you liked our video, do not forget to click on the like button below. Also, hit the subscribe button to subscribe to our YouTube channel and the bell icon to receive regular updates from our side. Last but not the least, we have a dedicated space for School of Stocks related discussions on FIRE's community. We encourage you to interact with us on our School of Stocks community page by visiting the link shared below. Thank you for watching this video.